In the last week, we've seen Bitcoin drop nearly 20%, resulting in more than $2 billion in long liquidations alone. The big question is right now, are we going to see a continuation of this correction? Where do we look for a bounce? And are we really seeing a repeat of 2017 where we had a massive crash right before the bull run? Let's get into all of that in today's video. Welcome back to the channel, guys. If you're new here, hi, my name is Jess, and as the channel name suggests, it's all about crypto, trading, and technical analysis. So if you're all about that or you'd love to learn, hit the like button and subscribe to the channel. Alrighty guys, let's talk about what has happened by diving right into the short time frame charts. So over here we can see this massive correction. In my very last video, I was actually expecting a bounce here on this level at $65,000 to $64,000. So we did get a little bit of a correction, but it wasn't as strong as I was expecting, and we did actually reject from $69,000. So upon that rejection of that short time frame, well, I guess it is a high time frame level of resistance, we continued downwards. This entire move now has been nearly a 17% correction. If we go over to our weekly chart, we can see the gravity of this correction. So we've lost our macro level of support, and we are forming a pretty large red candle to the downside. Over onto the monthly chart as well, we're getting very close to losing our green monthly candle close. So if we flip below this opening price here at 61,100, we will continue and have a red month. So let's talk about what all of this means and what that indicates for the future price action by going first back over into that short time frame. So starting off on the short time frame, let's talk about our current level of support or key levels. So after flipping below the $65,000 level, our next key level of support starts from $61,200 to that $60,000 level. So 60K being that psychological level. If we do break into it and fall below, I guess, there is a very high likelihood that upon breaking here, we will see a pretty big liquidity grab to the sell side liquidity level at $59,000. So that's actually okay if we do end up getting that some price action like that and we go back up. It is the 4-hour candle close that we're looking for. So if we end up getting a 4-hour candle close below the sell side liquidity level here, that will unfortunately be our trigger point for a continuation downwards. So on the short time frame, that is our very first question answered, right? How do we know whether we're going to get a continuation downwards? So we get that 4-hour candle close, we know that we are very likely going to see our next level of support, and that is at 50. Well, it's actually around 55 here. We might see this level here, right? If we had to take a look at that little bit of price action. So that's around $56,000, $55,000, but worst case scenario, we go back into this range of support here at 53K. In terms of levels of resistance, so now that we've flipped below 65 to 64K, that becomes our next level of resistance. As you guys can see from the screen handle here, that rejection there from 65 is what triggered a continuation downwards to this base of support here. And above that, we've got 69K, 72, so on and forth. So going on to pattern formation, we can see that we are in a parallel channel, so a descending parallel channel. And generally with these channels, we want to see 5 points of retest. So that is currently where we're at. So 1, 2, 3, 4, 5. And upon this 5th retest of the parallel channel, if we do not see a break of the top of that channel, unfortunately, I do see us losing this level of support, and at the very least moving into it. And that is where the price of Bitcoin becomes very, very critical, because like I said, if we get that 4-hour candle close below the sell side liquidity point, that is our trigger for a continuation downwards. And not only does that look terrible on the short time frame, but it actually has macro implications as well. So I'll talk about that a little bit more in just a moment. If we do break above and actually finally break through this downtrend here at the top of our parallel channel, we'll move into this level. So even if we move into it as a base of resistance and just kind of figure it out for a second there, that's fine. It's okay, because as long as we've kind of invalidated this channel, we know that we're seeing a little bit more sign of strength. Going on to RSI, let's pull that up. So on the 4-hour time frame, we can see our major RSI downtrend, right? So that starts all the way back from our very first retest of $69,000. We had the start of that bearish divergence that kind of indicated that a massive crash was coming. So obviously we're very far away from breaking through that downtrend. So if we take a look at the most localized downtrend, we can see this one here. So let's just take it from there. So this is our most local downtrend here. So that starts at the top at $73,000. So it lines up the most with this parallel channel. Sorry, my English just like left my brain for a sec. So if we break through this RSI downtrend, as we approach this level of resistance, we know that on this 4-hour chart, or probably even on a 1-hour chart, you'll be able to see it, we have flipped that momentum narrative. So that increases our likelihood and indicates that we should be seeing enough strength, because we've flipped this narrative here, to break above that level of resistance. And if we do, we might reject from 69, but that is something we'll have to consider then. If we reject from 69, it's still okay, because now we're traveling in a new range, right? The current range that we're traveling in is quite critical, particularly considering this level of support. So that is still a sign of strength, and that would still be really good to see. It would show us that, at least on the very short time frame, the correction has slowed down and potentially even stopped, right? So that's the first thing we want to see. And then the break of that higher time frame downtrend here on the RSI indicates a further continuation of that next level. So I'm assuming that will be that $69,000 level. We're just kind of coinciding these downtrends with the levels that they start off with. So that's that $69,000 level. If we flip the momentum narrative at that level of resistance here, we should see a break of 69. So now we know that's the second question answered. How do we know that we're going to see a bit of a bounce or the end of our correction on the shorter time frame? So that's everything I have to say on the short time frame for now. Let's quickly go over onto the weekly chart to talk about our position over there. So heading over to the weekly chart, I do have to say it is looking pretty tragic right now, won't lie. So I don't know what this candle pattern formation is called, purely because I don't really trade candle patterns, but just taking a look at it and what each of those candles mean, it's not looking great. So obviously we had our rally, right? Strong green, blah, blah, blah. And then we had last week. So last week where we had an all-time high form, and then immediately we had a fair bit of volatility, right? So we went all the way down to $64.4 thousand, and then we had a candle close like that right in the middle. So two huge wicks to the each side, and then a really small candle body. Naturally, the very first thing that tells you is that it has been very, very volatile. So we're approaching a stage after a massive rally of some indecision in the market, right? So whenever you're trading, not that I generally use candle patterns, but if you have, a lot of bearish correction, like a huge amount of red, and then you have one of those tiny little green bodies, okay, maybe we're going to reverse, and we're going to see a continuation back upwards again. So on the flip side, now that we're seeing a massive amount of green and then a really tiny body with a lot of volatility for a red-green candle, so obviously indecision and a potential for a reversal. So that wasn't very good to see, but I was still kind of thinking, okay, well maybe, we just wanted to test that base of support at $65,000. We did that. We had a candle close above. Everything's fine. But what we're actually seeing this week is a huge red candle that's potentially going below the previous opening price of that green candle here. So that is when we're going to see full confirmation. This indecision has led to a trend reversal, right? So if we see on this weekly chart in 5 days, if we have this weekly candle close below this level here, if we zoom in just to get it right, at 63,100, we are in a little bit of danger. So if we go back to that weekly chart, that 4-hour chart, shorter time frame, if we don't see a bounce above $63,000, this level here, if we don't see a weekly candle close above this level, we know we are in some trouble, right? So no matter what happens on the shorter time frame, if we end up getting that weekly candle close below this level, I think on the higher time frame, we do actually confirm a continuation downwards, right? So that will take us again back into that level of really critical support below potentially the sell side liquidity and, onwards. So that is on the weekly time frame. Definitely something to look out for. I wouldn't be sleeping on this, because I guess on that moment, so if you guys, I don't know what positions you guys are in, but if you have accumulated a bunch of altcoins way back when and you were just waiting to take profit or waiting to see if this correction was just a massive flush of liquidity, I would say that on this candle close in 5 days, if we do unfortunately get a candle close below, I would definitely be trying to minimize your risk and taking a look at what your best options are at that point in time. For now though, obviously the candle's still progressing, and like I said, on the shorter time frames we have exactly what we're looking for. So we want to bounce on this level, and we want to break that parallel channel. We want to break that local short time frame downtrend on the RSI. If we don't see those things in the next 5 days, we are in a little bit of hot water. So that's the weekly chart. Let's go over to the monthly chart and let's talk about what's going on there and why we're in such a critical position over there as well. So taking a look at the monthly chart, obviously when things do look bad on a higher time frame, it is a pretty big warning sign, because it's a sign that we're going to get a high time frame continuation of that downwards or that upwards move, right? So on the high time frame, I have to say, look, the monthly chart isn't looking that bad just yet. The weekly chart was what was looking the most alarming, because we were getting that candle wick downwards into that like concerning level, right? But on the monthly chart, what warns us that we're going to see a continuation on the macro charts all the way down, probably not down to 48, but just downwards in general on a very high time frame, is if we lose this green candle here. So as you can see, over the last couple of weeks, this candle body has gotten smaller and smaller. It is looking quite sad now. It's a little tiny baby at the bottom of a stick. And if we get a continuation of the price action that we're currently seeing, and we do fall below our monthly opening price, right? So that's at 61,300, I think, or is it 61,000 flat? Let's have a look. 61,100. So if we get a candle close below here and we end up forming a red candle for the month, what we'll end up doing is unfortunately forming a lower high on the macro charts. So if we take a look at the monthly candle close for $69,000, if we fail to get a, not 69, yeah, well for that month, all-time high of $69,000, the monthly candle close was at 61,100. So failing to get a monthly candle close above that level confirms a lower high on a monthly chart. So that is a super bearish sign that we're going to continue downwards, right? We want to see a candle close above that level. And so this brings us really well into that next topic of conversation, that 2017 crash. So let's talk about that really quickly. Okay, so if you guys have been in the crypto space at all, in the last 2 weeks, you might have seen a lot of analysis about 2017, what happened in 2017, and how it indicates to us that we're going to have a huge correction. I can try to find some articles and just pop it around everywhere, but a lot of them are saying that it is an indication for a larger correction on Bitcoin right now. So let's take a look at 2017 and let's see what it's telling us, right? So on the monthly chart, right? So we were just on the monthly chart for Bitcoin previously over here, but on the monthly chart, we can actually see that we had a monthly candle close above that prior all-time high monthly candle close here. So if I was looking at this back in 2017, I would have actually been wrong. I would have said that we are going to continue upwards because we've gotten a higher high and we should be seeing more bullish price action. But what we actually saw was pretty interesting, because we had that monthly candle close above that prior high. Then we had a massive amount of volatility that took us to a new all-time high for that period, and then a massive correction downwards. So that entire move from the top to the bottom was about 32%. Now that sounds pretty similar to what's been happening currently, right? So we had a huge amount of green. We had a candle close above our prior weekly candle close for the all-time high. Then we had a massive amount of volatility. We spiked to a new all-time high, and then we had a massive correction to the downside. Now what happened in 2017 was, if we go into the weekly chart, the candlesticks look quite similar actually. So had that green rally. So they had 3 weeks of green here. We've had 2, but they were I think they were steeper candles. And then we had tiny green body, lots of volatility. Same thing over here. And then they had an engulfing candle that went below the opening price of that green candle here, and they continued downwards. So just based off that, it does look really similar. I can see why people might be saying we're seeing a repeat of 2017. However, it's the gravity of the similarity that I disagree with. So people are saying that because of what's happening here, we're going to see currently from where we are, I think I've heard like a 45% correction. So if we go off from this all-time high here, a 45% correction would take us to $40,000. So that's a lot of consensus that I'm seeing right now. I'm seeing some more conservative $60,000 predictions, 55, etc., etc. Let's go on and have a look at what we see. So from the this chart here, we can see that the massive amount of correction that we had, the most amount of correction we had was to this candlewick here. But if we take a look at the candle close, we actually see that the candle closed and bounced and then continued on the bull run after we had the candle close above the prior weekly all-time high candle close. So if we take a look at where we are currently, that doesn't exactly work for us because we are already below that level here. So that's at $65,000. So that, based off 2017, based off this correction, we would be saying that we're going to bounce at $65,000 and then continue upwards. But that would be contrary to the pattern that we're already forming here, this lower high, this engulfing candle, and a continuation downwards. So what I'm assuming, right, so this is a fair bit of assumption, this is a fair bit of speculation, which isn't particularly what is on brand for this channel, but let's just go off what that analysis is saying. Let's go on to this weekly candle close. So this was one of the weekly candle closes for what was going to be the prior all-time high for this bull run, and then we had a massive second rally. So if we go off this weekly candle close, that is at $60,000. And we know on the short time frame that $60,000 is a really key level to be holding. So maybe if we go off from that 2017 analysis, we apply a little bit of speculation and use this prior weekly candle close here, we can say that from that 2017 analysis, we're going to have a weekly candle close after this correction at 60K, bounce, and then continue on with our bull run. So off the bat, you guys can see why they might be saying that it's very similar, but I really don't understand the gravity of their claims, and I don't really see why we should be applying this one time frame point of analysis and saying that we're going to go to 40K. So I would just keep that in mind while you take a look at the charts from now on and see what's going on social media. All right, so that is a little bit of debunking there for you guys. Don't listen to everything you hear online, even though I'm online. I know that I justify myself at least, right? Like I explain why I think what I think, and I'm breaking down 2017 and explaining why I think people might be wrong. So today's been a really big video. Let me recap really quickly everything that I've said. So going to the short time frame, we have a really critical level of support. We want to see a 4-hour candle close above this sell side liquidity level and a bounce on this fifth retest point of this parallel channel. As we approach our next level of resistance at 65K, we want to break our local RSI downtrend here to suggest a momentum flip on the short time frame and a test of our next level of resistance at 69K. If we see that coinciding with this higher time frame RSI break, we should see a move to 72. Going on to our weekly chart, right? We want to see a weekly candle close above this opening price for that green candle here at 63,100. Otherwise, we will form an engulfing candle and suggest a macro continuation downwards. So going off that into the monthly, that increases our chances of having a red month, forming a lower high, and unfortunately, again, suggesting a higher time frame macro continuation downwards. So when we see that, I'll make another video and we'll talk about where we're going to go next. But for now, that is everything I have to say. So that's the end of the analysis today, guys. If you enjoyed it or you learned something, don't forget to like and subscribe to the channel down below. If you want to see more of my content, I do have a free Telegram channel where you guys can sign up for daily Bitcoin updates as well as crypto and economic news. If you're interested in my VIP channel, you can check out more details over here. VIP gives you exclusive access to real-time trades, entry points, stop losses, and targets, including trade justifications and a risk management and trading journal. If you are a trader and you want 15% off your trading fees, sign up down below to BitGet and BingX. They are two of the world's top 10 exchanges, and BitGet is available to everyone outside of the US and Singapore, and BingX is available non-KYC and worldwide. I hope you guys have a great week, and I will see you next time. Bye!